I'll show you here how to prepare a ledger account. In our previous tutorial, I showed how to prepare a cash book. Okay, so here in this cash book, we have some supplier related transactions. Okay, for those transactions, we will prepare a supplier account. Okay, it is Alexander. Okay, so here for your better understanding, we are doing a question which is taken from 2023 IGCSE accounting past paper. So here in the question we see some transactions which are not related to the cash book, but these are given with the cash book account question. Okay, so here we will record this transaction in the supplier ledger. It is also an requirement. Okay, so let us have a look at the question. So here what is written: Omar is a trader. The following transactions took place in April 2023. So here we see many transactions, and some transactions are not related to the cash book but related to the supplier. Okay, then here our requirement is prepare the account for Alexander for April 2023, balance the account and bring down the balance at 1st May 2023. Okay, so cash book, already I wrapped this cash book. If you want, you can watch our previous tutorial. It will be good if you watch, otherwise many things you will not understand here in the supplier ledger. Okay, so here what to record in this account, in this ledger. So all Alexander related transaction will appear here in this account. Okay, so Omar is the business. Think you are Omar. Okay, in your business you are doing Alexander account, who is your supplier. Okay, so now what to do, you will check first of all you have any opening balance for this supplier or not. If you have opening balance, you need to record on the credit side. Okay, supplier account balance is a liability for Omar. Okay, for the business. Okay, so liability is a normal credit balance, you need to record on the credit side. So on the question already opening balance is given, it is $360. So we will write this opening balance first of all. Okay, it will appear on the credit column. As I said, it is a liability for Omar. Okay, for the business. So we will write here the date 2023, it is April 1st. The opening balance will appear as balance BD. Okay, BD stands for brought down. So on the question we have here $360. Okay, if it is a new business, there will be no opening balance, but here in this question you have opening balance, so you must write. Then here on the question we have a transaction April 7, paid $360 to supplier Alexander by telephone transfer. Okay, telephone transfer is a transfer which is made by telephoning by the account holder. Okay, so here the account holder is Omar. So Omar telephoned the bank and told to pay this amount. Okay, $360. Now what will be the transaction? Where to record this transaction, on the debit side or on the credit side? What will be the journal for this transaction? So here Alexander account to be debited and bank account to be credited. Okay, why bank account to be credited? Because bank balance is here decreasing. Decrease in bank will be credited, and Alexander is here receiver, and receiver account will be here always debited. Okay, so as we are doing Alexander account and this account is here debited for this transaction, so we will go to the debit side. Okay, we will write the opposite account, which is bank. Okay, so let us write here the date first, 2023 April 7. Okay, we will write here bank on the detail column, and the amount is here $360 on the dollar column. Okay, great. Then we have here our next transaction, April 12, purchased goods $340 on credit from Alexander. Okay, purchased goods on credit. This transaction we did not record here in the cash book. Okay, it is not a cash related transaction, but still it is given. So this transaction will appear here in the Alexander account. Okay, so it is made on credit. Okay, so what will be the journal? You know, it is a simple purchase account to be debited and Alexander account to be credited. Purchase is always debit, nominal account, it is an expense. Expense has a normal debit account. Okay, so here purchase is debit, Alexander account is credit. So we are doing here Alexander account, it is credit, so we will come to the credit side. We will write the opposite account, which is purchase. Okay, so let us write here the date first, April 12. We will write here purchase on the detail column, and the amount is $340. Okay, great. Our next transaction is here 27, paid $323 by check to Alexander, having deducted $17 cash discount. Okay, paid to Alexander, and this money is paid by check. Okay, so what will be the journal here? Alexander is a receiver, so receiver account to be debited. That means Alexander account to be debited, and paid by check, that means bank account will be credited because bank amount is here decreasing. Okay, so now here there is a discount, $17 cash discount. Okay, so we paid Alexander $323 and we received discount $17. Okay, so here Alexander account to be debited, we will come to the debit side. So date will be here 27. We will write here bank. So by check we paid $323 and we received the discount. So how much we received? We received $17. Okay, so this transaction is very common in the exam paper. I hope you understood how we recorded. If you don't understand, watch this video once, twice. It will be very clear for you. Okay, then we have here 28, purchased goods $235 on credit from Alexander. Okay, same transaction we had before. So purchase goods on credit, this transaction is given for cash book question, but it is not related to the cash book, so we skipped. Okay, now we will record this transaction here in this account. So here what will be the journal? So purchase account to be debited and Alexander account to be credited. As Alexander account is credited, we will come to the credit side here and we will write the opposite account, which is purchase. Yeah, so let us write here the date first, 2023, April 28. We will write here purchase and the amount is here $235. Okay, so we finished writing all the transactions. Now we need to balance it. It is a requirement on the question. So how to balance it? So it is simple. We have to compare debit dollar column to the credit dollar column. Okay, we have to check which dollar column is greater. So we see our credit dollar column is greater, right? So we will total credit column first. So here we get $935. Okay, the addition, we will take this total to the opposite side, means the debit side. So we will write here 935. From this total, we will subtract this all amounts. So we get here $235. Okay, this is the closing balance of Alexander account. So here we will write balance carried down CD. Okay, and for balance CD, the date will be the last day. It is April 30. Okay, so on the question, it is also a requirement to bring down the balance. So balance CD and BD does not come on the same side. Okay, so balance CD is on the debit side, balance BD will be on the credit side below the total. Okay, so here we will write balance brought down BD. So same amount, $235, we will write here. And for balance brought down, date will be first day of next month. Here we are doing for April 2023. The first day of next month will be May 1st, 2023. So we will write here date May 1st. Okay, this is how you need to prepare supplier account. This question these days very common in exam paper, but many of you can prepare cash book perfectly. When you go to the supplier ledger, you make mistake.